Hello, Namaskar to all the viewers of this JP Accountancy Hub. My dear students, in the recent session, we have completed two chapters of our CA Foundation, right? Chapter 2, Rectification of Errors. Chapter 3, Bank Reconciliation Statement. From now onwards, we solve some problems on this fourth chapter. It is a inventory. My dear student, it is a chapter for CA Foundation mainly for 5 marks, if not for 4 marks. Sometimes you may get it for 10 marks, but very rare case 90% of the time it is a chapter for 4 or 5 marks. Okay, let us have a small discussion regarding what the inventory is, how the inventory valuation is being undertaken, what are the different ways in which you can ascertain the value of inventory, my dear student. See, inventory means, general meaning of inventory is what? Stock. Stock means what? It is unsold or unused goods. Am I right? Inventory means what? A stock. Unsold or unused goods. This stock is of three types. One is stock of raw materials, stock of work in progress called WIP, stock of finished goods. These are the three types of stock that usually the firm used to maintain. Normally the trading business will maintain the stock of finished goods. Manufacturing concern will maintain the stock of all the three types. Raw materials, work in progress and finished goods are the three types of stocks that usually the manufacturing concerns will maintain. The non-manufacturing concern called trading business always maintain the stock of finished goods. Now, what are the different ways in which we can value the stock? There are 4 methods through which we can ascertain the value of stock. One is FIFO, called first in, first out. Means whatever the materials you are purchased first or issued first to the production center. First in, first out. So under this method, the stocks are valued at recent purchase prices. The cost of production will be at oldest purchase prices, because usually the materials purchased in the beginning, in the olden days, 1 year, 2 years before, are the less when compared to the recent prices, purchase price, because of the inflation, right? Second method is LIFO, called lost in first out method. Means the materials purchased lost or issued first to the production center, to the required center. What happened? When you issued the material purchased lost at first to the production center, the cost of production will reflected the recent purchase prices. It shows the competitive purchase prices, but the stocks are valued at old purchase prices. That is a disadvantage of LIFO method. Third one is simple average price method. The last one is weighted average price method. These are the 4 methods through which we can ascertain the value of stock. I take all these methods at the end of this particular chapter, not right now. I hope you got it right. What are the 4 methods to value the stock? First in, first out method, material purchased first or issued first, last in first out, material purchased last or issued first. Then we have a weighted average method and simple average price method. Okay, fine. These are the different methods. Now, how to value the stock? How we can value the stock? How we can ascertain the stock? In that, the first method is historical cost method. On this method only, I solve few problems. Okay, historical cost method. Now the question arises, sir, as a student, how we can find that we can use the historical cost method? When to apply the historical cost method? I usually inform the students, please make a note of the key points that really helps for your preparation. This is one among them. When we have to use the historical cost method? The only clue, my dear students, in your problem, closing stock is given at what price? Selling price. Please make a note of this in your notes, in your keynote. When a student can apply the historical cost method? The only answer, my dear student, in your question paper, when your question paper, if the closing stock is given, what is given to you? Closing stock is given at what price? Selling price. This is the only clue that every student should remember, that we can apply the historical cost method. I tell you the procedure and all in the later stage. First, as a student, you should know when we can apply the historical cost method. My dear student, we can apply the historical cost method when the closing stock is given to you at the selling price. Got it? Next, how to ascertain the stock? How to ascertain the stock? Under historical cost method. Okay, how to ascertain? I tell you the method. See, we have to take the sales. For this, we have to add closing stock at selling price. SP means what? Selling price. You take the sales. For that sales, you add the closing stock at selling price. Put together, you add both and take it here. Because close sales and closing stock comes in what side of the trading account? You know very well that? You know this is your trading account, right? Trading account credit side में क्या आता? Sales आता, closing stock आता. You add both, my dear student. You add both, you take here. बाद में क्या subtract करना here? See what we have to subtract. Very simple logic. I'm not going to teach you any extra thing. I'm going to teach you only those things that you used to record in the trading account. In trading account डेबिट साइड में क्या आता? डेबिट साइड में ओपनिंग स्टॉक आता. बाद में क्या आता? After that we get purchases. Thereafter we get direct expenses. These are the three things which comes in the debit side of the trading account. Sales and closing stock are the things that comes on the credit side of the trading account. Here the closing stock is given at what price? Selling price. As per the accounting standard 2, as a valuation of inventory, we know that stocks are to be valued either at the cost price or at the market price, whichever is less. Please remember, this is very important for true or false. As per the accounting standard 2, which says the valuation of inventory According to that, the inventory is to be valued either at the cost price or at the market price, whichever is less. Here the closing stock is given at selling price, means at market price. Then we have to use the historical cost method. How to ascertain the value of real closing stock under the historical cost method? Please remember this trading account trick. On the credit side, we have a sales and closing stock. In the debit side, we have a opening stock, purchases and direct expenses. Now what to do? How we can ascertain? Take the sales and closing stock. Okay, fine. What and all the things comes in the debit side? Opening stock आता है ना debit side में. Opening stock क्या करना? You have to subtract the opening stock. Simultaneously, we have to subtract purchases. Sometimes for these purchases, they might have given you trade discount. What? For purchases, you might have given the trade discount. From purchases, we have to subtract the trade discount. क्या बोलते हैं इसको? TD. TD means what? Trade discount. After that, if any tax is given, you add the tax. Are you getting my word, my dear student? We have to subtract the purchases. For purchases, if the trade discount is given, subtract the trade discount out of purchases. If there is a tax called a GST, maybe CGST or SGST, you add the tax to the purchases. Take this one. बाद में what we have to subtract? We have to subtract the direct expenses. Subtract करना. I tell you what are the contents of direct expenses after few minutes. We get the answer. That answer is called, my dear student, gross profits. I am requesting you, please make a note of this in your notes, in your keynote before going for problem. What we have to take? The simple logic. Sales and closing stock, add both. You subtract these three items. What they are? Opening stock, purchases, direct expenses. For purchases, if you are given with trade discount, we have to subtract from purchases. If there is a tax, we have to add a tax to the purchases. After this, we get an answer of trading account. The objective of preparing trading account is to ascertain the gross profit or loss. See, the answer whatever we are getting is gross profit. When once the gross profit you got, then next what we have to do? The next step after getting the gross profit, what we have to do is we have to calculate the rate of gross profit. How to calculate the rate of gross profit? Amount of gross profit divided by net sales into 100. Amount of gross profit by net sales into 100. I tell you, what is the amount of gross profit? This is the amount of gross profit. What is the amount of net sales? The amount of net sales is this one. You take this, for example, if it is 100, if it is 1000, answer is 100 divided by 1000. I write here. See here how to write. 100 divided by 1000 into 100. It comes to 10%. This 10% is your rate of gross profit. What it is called? Rate of gross profit. Then we have to calculate value of inventory. How to calculate the value of inventory? Very simple. Take inventory at selling price minus gross profit on inventory. Did you understood? How to calculate the value of inventory? Inventory at selling price और selling price में inventory दिया है ना, उसमें क्या subtract करना? Gross profit on inventory subtract करना. Means if you got a 10%, if you have a inventory, you take inventory minus 10% of inventory. That is called the value of inventory. I hope you got it, my dear children. How to ascertain the value of gross profit under historical cost method? Take the sales and the gross profit in closing stock, subtract all these things. You are getting a gross profit. That gross profit is to be divided with your net sales. You are getting a rate of GP. When once you got a rate of GP, how to ascertain the value of inventory? Inventory at selling price minus gross profit on inventory. Okay, in the next session, I go for explaining the content of direct expenses. But right now, I move on to the first problem. I am going to solve two problems under this particular method. Shall we go for the first problem? Did you understood what I told? Did you make a note of it? Now listen to me. See what happened in the first problem. Calculate historical cost of inventory. Oh, he is asking historical cost. I told you when to apply the historical cost. When the closing stock is given at selling price. Using adjusted selling price method. So, historical cost is ascertained by applying the adjusted selling price. Sales there, cost of purchase is there, opening inventory nil, closing inventory at what price is given, selling price is given. When closing inventory at selling price is given, what method we have to apply? We have to apply the historical cost method. Shall we? Now let us write the solution. What? Calculation of inventory at historical cost method. Okay. Now, what is the method that we have to apply? We have to take sales plus closing stock at selling price. So, instead of abbreviation, I go for detailed explanation. Sales plus closing stock at selling price. Selling price is also known as invoice price. Okay. Now, what is your sales? 2 lakhs. What is your inventory? 50,000. So, what I have to do? I have to take 2 lakhs plus 50,000. Put together it is how much? 2.5 lakhs. Out of this we have to subtract what? We have to subtract opening stock. Please my dear student, whenever you solve the problem, you remember this trading account. क्या आता? Here sales, closing stock. Here opening stock, purchases and direct expenses. Remember this trick whenever you solve the historical cost method. So, I took sales and closing stock. It is 2 lakh and 50, 2.5 lakh. Now, what I have to take? I have to take opening stock. Whether is it there or not, it is better to write once. Okay. If you forget to write, even if the item appears in the problem, chances are there that we might have missed it. We might have going to miss it. So, you take opening stock, वो तो नहीं दिया है dash. बाद में क्या subtract करना? We have to subtract purchases. See what is the amount of purchases? Cost of purchase is 2 lakh. So, you subtract that 2 lakh. बाद में what we have to subtract? We have to subtract direct expenses. Always Sudhakara will do what? You know, I always take the important things, whether is it present or not. I have taken sales plus closing stock, subtracted opening stock, subtracted purchases. I think no direct expenses, right? Direct expenses to nahi hai. So, now I will work out answer. The answer is called what? Gross profit. 2.5 lakhs में 2 lakh गया तो कितना आता gross profit? 50,000 आया. Next step. When once I got this one, the next step I have to do is, that is rate of gross profit. Formula is gross profit divided by net sales into 100. What is the gross profit? 50,000. Especially under the historical cost method, not in other method, especially under the historical cost method, net sales is 2.5 lakh. But in other cases, in general problems, net sales means only 2 lakh. Sir, why we have to add? Because the closing stock is given at what price? Selling price. So, put together both are given in selling value only. That is why we have to take, that is a 2.5 lakh into 100. Use the calci and work out. 50,000 by 2.5 lakh into 100 is 20%. Got it? So, you got a gross profit, you got a the rate of gross profit. Next, what I have to do? I have to calculate, that is value of inventory. How to calculate value of inventory? We have to take closing stock at selling price minus gross profit rate on what? On closing stock. क्लोजिंग स्टॉक एट सेलिंग प्राइस माइनस सेलिंग प्राइस में ग्रॉस प्रॉफिट रहता है ना, और ग्रॉस प्रॉफिट क्या करना? माइनस करना. दैट इज ग्रॉस प्रॉफिट रेट ऑन सेलिंग क्लोजिंग स्टॉक. व्हाट इज अ क्लोजिंग स्टॉक एट सेलिंग प्राइस? क्लोजिंग स्टॉक एट सेलिंग प्राइस इज 50,000 minus what is the rate of gross profit? 20%. 20% of what? 20% of your closing stock, that is 50,000. That is 50,000 into 20%. Now 50,000 minus 20% of 50,000 is 10,000. So your answer will be how much? Your answer will be 40,000. This completes the answer for a first problem, my dear student. Did you understood? Let me move on to the next problem that I am going to solve here only. See, this question is asked in July 2021. Bapre, for how many marks, my dear student? For a 5 marks. See, from the following inventory, calculate the historical cost of inventory using the adjusted selling price method. Good. You know very well when to use the historical cost? When the closing stock is given at selling price. See, purchases is there, sales is given, fine. Opening stock is nil. Closing inventory given at what price? Selling price. Whenever you apply the historical cost method, please, my dear student, remember this is your trading account. Debit side may opening stock, purchases, then direct expenses. Credit side may sales and closing stock. What we have to do? Add both and subtract these items. That will give you the gross profit, right? Shall we solve? That is using historical cost method. What we have to write? First line, sales plus closing stock at selling price. See, what is a sales, my dear student? 7,50,000. Closing stock तो 1 lakh है. So कुल मिला के कितना हुआ? 7.5 lakh plus 1 lakh. It comes to 8,50,000. Fine. Out of this, what we have to subtract? We have to subtract opening stock. Opening stock is also known as the opening inventory, right? Do we have a opening inventory? It is nil. So what we have to write? Nil means dash. बाद में क्या subtract करना? We have to subtract purchases. How much purchases are given in the problem? It is of 5 lakh rupees. Later we have to subtract direct expenses. Do we have any direct expenses? No direct expenses. We are getting the balance. That balance answer is called what? Gross profit. ओ ये तो subtract करना. Subtract किया तो कितना आता? 3.5 lakh. That 3.5 lakh is your gross profit. Later we have to work out rate of gross profit. Formula is gross profit by net sales into 100. What is the gross profit? 3.5 lakh. Net sales is how much? 8.5 lakh into 100. Use a calci and work out. The answer comes to 41.1765%. Okay? Did you understood? Now what we have to do? We have to calculate, that is value of inventory. For that, closing stock at selling price minus rate of GP on closing stock. How much closing stock at selling price? Closing stock at selling price is 1 lakh. So you take 1 lakh minus rate of GP on closing stock. Closing stock is 1 lakh. What is the rate of GP you got? 41.1765. 41.1765 percentage. So 1 lakh minus 41,177 we are going to get. After subtraction we are getting 58,823 is the value of your closing stock. Did you understood, my dear student? Please remember, under historical cost method you need to have the idea of this. It's very easy to ascertain the value of stock. I hope you understood, right? In the next class, class 2, I am going to explain what are the different contents of direct expenses, how we can ascertain the value of inventory by applying the direct expenses also. Okay, thank you, take care, bye bye my dear student. Please go through these videos, make a note of key points in your keynote. Thank you, namaskar.